Tyson Foods stock is being hit hard this morning after the company's third quarter revenue missed Wall Street expectations as higher beef prices ate into consumer demand. The meat company also announcing it's closing 4 additional U.S. chicken plants in an effort to cut costs. This comes after Tyson closed 2 of its plants in May. Those had employed about 1,700 people. The shares are down by more than 10%. And it didn't just miss. They missed by a lot. So if you look at the earnings per share here, you're talking about 15 cents. Analysts have been looking for 26 cents, and sales fell by 3%. So things not going so great here when you look at these Tyson numbers, and it explains why the stock is down so much.
Yeah, a page that we were refreshing over and over again this morning, only to find that they had covertly kind of just put it up as a SEC filing on their website. So ultimately, we did get the numbers here, and as you're taking a look at the rest of the investors that got wind of what took place in the misses, down sales by 3%, as you mentioned, from the prior year. And then additionally, look at the adjusted EPS. That was down 92% from the prior year here. So some significant losses here in terms of the year-over-year performance. And additionally here, they're saying that they closed on an acquisition. And of course, that already announced the Williams Sausage Company. So we'll see if that eventually or immediately becomes accretive to the business here. But I think for what the management is spelling out right now in terms of Tyson Foods, they said the current market dynamics remain challenging, but they're going to try and, of course, still deliver on sustainable top-line growth and margin improvement. It's just a question of where that margin improvement comes at this point going forward. The operating margin, total company GAAP market operating margin, that was about 0.2%, but then the EPS still a jarring decline year over year, down more than 100% for this quarter. Yeah,
I mean, so if you look at the average prices for different meats, pork prices down 16.4%, chicken average prices down 5.5%, volumes down as well. They saw tight cattle supplies, they saw high feed costs. What's interesting here is that if you look at the main other poultry producer, Pilgrim's Pride, it came out with its numbers at the end of July and did okay. So that raises questions. Maybe it's partially about Tyson's mix of different proteins versus something like a Pilgrim's Pride. Maybe it's also about execution. Whatever the case, the company is acknowledging that it has a lot more work to do here.
This has also been a challenging period, too, for all of the companies that are in this landscape of making sure that across the meat, making sure that their operations are taking care of the cattle, the feed, all of that. The environment and the heat wave, that also gets called into question, and that could also move some of their costs higher. If you're paying more to make sure that the cattle is, taken better care of, all things considered, and making sure that there's more cooling or more fans, that's more that you've got to kind of account for in terms of some of your overhead just to operate a company like this too. So yeah. I think that could have something to do, and it'll be interesting to see if they offer any color on that regard in this earnings call.
Yeah, there were lots of fans that were needed to keep the livestock cool.